This is the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. We are looking at the 4-hour time frame here. Each candle represents a 4-hour trading period, and as we can see, the stock is actually trading quite close to its 78.6% Fibonacci retracement zone from its recent rallying trend move. So this is significant for a couple of different reasons. Now let's just sort of identify what it is we're talking about first so that everybody can be on the same page. If we go back to, this would be roughly June 2025, middle of 2025, we can see that the stock was actually trading at much lower levels. Prior to that, the stock had fallen from these important cyclical highs near roughly $7.70. That would be this price movement. And then we came to a low around this level, and then we started to bounce once again. So a lot of market enthusiasm was seen during this time. And what this ultimately created here was a trend wave movement that should be analyzed, because right now it is the dominant trend wave movement. From the lows at 335, we can see that the stock did manage to move into 805. But since then, we have started to see a fairly significant movement back to the downside. During this process, we have broken through all of the major Fibonacci retracement zones except for one. This would sort of be the last line in the sand from this perspective, the Fibonacci analysis perspective, because as we can see, 435 is now the 786 retracement. So in other words, you've retraced about 78% of that price move. Very significant difference here. And what's interesting, if you look at YouTube, you saw a lot of enthusiasm on the way up. You saw many people, I guess I don't need to name names here, but you saw many people who were saying, okay, well, we went to $8, that means we're going to $10, we go to 10, we go to 50, and then we go to 100. Of course, the stock started to move in the exact opposite direction. We started to get discussions about fraudulent activities, reporting revenue during periods of time where it should not have been reported, and we're still closing below the $5 mark at this stage. From a momentum perspective, what we can see is that there is still clearly negative momentum that is governing the share price. So as we can see here, there's a lot of downside price action here and a lot of negative momentum that's going to need to be broken before we can really expect a reversal. Now, that's not to say that that would be impossible. As we can see here, there is an emerging uptrend in share price momentum that could start to catch prices eventually. But what it looks to me, based on this perspective, is that we're not quite there yet, because this is the moving average convergence divergence. It's called the MACD reading, MACD, and it's rolling over out of overbought territory. So that would suggest that the stock price had become too expensive. And you're starting to see these red trading bars now because we're starting to see a significant rollover to the downside. Now, we have not yet crossed below the zero line. That would be this area here. A much larger acceleration and downside momentum would be seen if we see a break below there. As I said, we're not there yet. So, this is sort of what you need to watch at this point. Does this indicator reading move below the zero line? Because if it does, there's a lot of room to extend before you start to become oversold. That would be roughly this area here. It's kind of green down here. So, you could see share prices fall into this area and then bounce off of this trend line. And then that would start to give you some positive momentum once again. Maybe something like that could bring the stock back above $5 per share. Who knows, maybe even lead to another retest of that $8 resistance level that we were talking about earlier in the video. But at the moment, the prevailing idea here is that we're rolling over out of overbought territory. There's a lot of negative momentum that's governing share prices, and there's still a lot of room here to extend before you start to reach oversold levels. If we do continue to move lower in share prices, where exactly would we expect to drop? I mean, this is the real question, because on YouTube, what people do is they buy on rallies. They don't wait for share prices to be cheap. People get excited when things are moving higher. But in this case, and what we do in the trading room, the Discord trading community, is we wait for share prices to show weakness before we start to buy anything. We don't buy during rallies. This is where all the enthusiasm was happening. This is where all the fear is happening. So this is where you start to buy. If you're going to buy, you buy on dips, but you have to have evidence that a reversal is in place. We did recently break below the 61.8% retracement zone. That's this area, green area here. And that's important because that is the most important retracement zone. The entire Fibonacci sequence throughout the universe, throughout mathematics, it's all based on that 618 retracement. 0.618 is referred to as the golden ratio, so that's why it's so important. And in many cases, when you do see a break below that level, share prices don't stop at the 786. I mean, in this case, they have so far. I mean, maybe you can possibly still see a bounce here. Share prices are attempting to move above their exponential moving averages. If we really zoom in closely, you can see that there was recently some movement above this blue line. That would be the 200 period EMA. And that would be suggestive of upside, momentum starting to build. But as we can see, we really got more of a failure here rather than a break. In many cases, when you're looking at these technical signals, you have to make a determination about whether or not the stock is making a false breakout or a legitimate breakout. And when you start to see reversals like this very quickly, it really calls into question whether or not the stock actually did break above that 200 period exponential moving average. So right now, at the very least, I would be waiting for a test of roughly $4.50 before I do anything. I am not like Mr. P or Neo Lifer or Stockmo or any of these other idiots that don't actually know how to trade the market. What they do know how to do is to pump a stock and to get people excited about a stock. That's their content is terrible. Their analysis is not very smart. What they do is they pump. It's pump and dump. It's meme stock pump and dump. What we do in the Discord trading room is we wait for major declines. And the question at this point is whether or not enough of a decline has occurred in order to justify new long positions. If we do see share prices move into about $4.50 and then maybe they start to bounce from there, I suppose you could start to get excited about the stock once again. Maybe look for another test above $5 and then maybe again at that $8.05 level. But if you do break below $4.35, the next level of support to the downside is not seen until you get to about $1 lower, which would be $3.35.